call about that. We're joined by the CEO and Managing Director of the company, Govt, joining in with us right now. Mr. Singh, good morning. Thank you so much for joining in with us this morning on ET Now. Let's start by that operational performance, which I was talking about, because that still remained muted in the last couple of quarters, the 23% range for the EBITDA margins. What's the outlook in terms for the margins as well as in terms of the profitability going forward? Could we expect the margins to cross and move way past that 23% mark?
So just wanted to give you let's say, an overview of our performance in quarter four. It's one of our best quarter fours that we had, whether it is in terms of member additions, whether it is in terms of upgrades, and even at a full year level, our member additions clocked 20,000, which is 15% up. And if I were to look at upgrades, with the upgrades, the value growth has been 16% at the full year level. And if I were to look at for the quarter, we were about 18%. So these are fantastic numbers as far as we are concerned. Our occupancies were at a very healthy 87% in quarter four, full year at about 85%. Our deferred revenue crossed 5,600 crores. Our cash position is at a very healthy 1,383 crores. So phenomenal amount of cash generation happened at this year as well as in the quarter level. So all of this all-round performance is also aiding the income, EBITDA and PBT, both at quarter four and full year level. Our margins are also significantly up. Profit after tax growth was 25% for the full year and for the quarter. And as far as our margins go, our EBITDA margin at the full year level at 28.5% is again the highest ever margin with the improvement in the overall margins. So on overall basis, both at a quarter and yearly level, this performance both in the operational metrics as well as financial metrics has been the best ever for us in our history.
You have had the best ever quarter even in terms of member additions, right? 5,734 thereabouts. But going forward, what's the target membership base for the coming year, and how much do you think will be driven by the digital route going forward?
So our member additions were very robust in quarter four, and the full year we clocked 20,000 member additions, which is a very significant milestone. We have actually increased our momentum in the area of member additions as we have increased our momentum in the area of inventory additions. As I told you, 387 rooms got added. We crossed the 5,000 mark. We are at 5,327 rooms for the full year. When I look at member additions, the fact that our membership holds huge value in terms of holidaying with your family, multi-generational holidays is what we are seeing people doing, and the immersive experiences that we provide, as a result of which there is a significant pull we are seeing for our member additions. Our referrals and digital put together contributed 59% of our sales came through the referral and digital route in the quarter four, and for the full year, 57% of the sales. Now, this is very admirable because digital route of acquisition is firing well. So is referrals, because in our business, referrals are extremely important. People, when they have great experience, they talk about it, and that is what helps us to grow the members. So our member acquisition costs have come down significantly this year and in the quarter. So this is a very, very good sign as we move ahead with the inventory acceleration, with the member acquisition costs coming down, with the pull for the brand through the referral and digital. I think we are on a very good trajectory.
Right. And what about your CapEx, the plan that you had to invest about 4,500 crore rupees in the next 3 to 4 years to double your room capacity? What geographies are you looking at?
So as far as geographies go, our primary focus is India. We are, of course, looking at the Southeast Asia as well, including countries like Sri Lanka. Our idea would be to grow our footprint primarily in India, as I said, and of course, opportunities in the nearby countries as they come along. We are looking at all sorts of opportunities, whether it is an acquisition, whether it is working with the governments, as I would highlight that we have a very significant momentum in the public-private partnership with the various governments. Maharashtra Tourism has given us the contract, the concession agreement has been signed for us to take over MTDC Hariyareshwar property and build it to a very large resort. Parallelly, we are working with Uttarakhand government. We are also working with Odisha government. We already have one success story with Himachal government where we launched a resort with PPP participation in Jhanjeli in Mandi district. So PPP is another way to increase our footprint and create destinations. As you know, we are known for creating destinations. So we will do that. And this is what will propel ourselves in terms of expanding inventory. More inventory means more member additions and therefore more cash generation. And therefore, we are in a position to propel our growth from 5,000 rooms to 10,000 rooms by 2030.
Right, and recently we did have a commentary coming in from the Mahindra Group MD CEO as well. What they were saying and what they highlighted that they expect Mahindra Holidays to actually start seeing a 5 times revenue growth going forward. Could you give some outlook on that? By when is this 5 times growth that one could expect from the company?
So, as far as our business model is concerned, uh, our aim is to create disproportionate value. And I said that the way to do that is to increase capacity. So the route is to increase the rooms from 5,000 to 10,000, drive resort revenues disproportionately by ensuring that people spend money in the resorts, whether it is F&B activities, etc., and also get the right customers who are going to be able to enjoy this experience. That is the business model that we have. And as you can see, that when you increase the capacity, you will be able to add more members. And by the way, in our business, we already, in this year, we added 270 crores to our deferred revenue. You should look at deferred revenue. We are at about 5,600 crores of deferred revenue already, which will keep coming into the future. So our aim would be not only to deliver the period revenue, which you see in the accounting year, and which also grew at a very healthy about 14%. And our aim would be to obviously accelerate that, but parallelly, just ensure that the deferred revenue is also seen, which is currently at a very healthy level of 5,600 crores, which will keep adding to our revenue in the future. So we have multiple levers to grow our revenue. Resort revenue, deferred revenue is growing. That's a function of how we quickly accelerate member additions and how many members we upgrade. And that is a function of the experiences we provide. So it's all an integrated whole. All of these levers will be pressed to achieve the targets that we have set out for ourselves.
Kavinder, on that note, we let you go. Thanks so much for making time and speaking with us today. Well, the market